So let's bring Henry in on that note. And you were just in Mexico, were you not?
I was, yeah.
On a fact-finding mission?
Fact-finding, yep.
What are the facts? What can you tell us?
I'd say the facts are a couple-fold. One is that Mexico is seeing a substantial slowdown since the tariffs. Companies have pulled back on CapEx, so they're feeling...
Even just under the threat originally, because today's the first day we're actually seeing it.
The one thing I would comment, we own 150 businesses around the world. There's a lot of planning that goes into this. And so what I would say is you saw companies such as Tesla and others start to pull back a while ago. So you're seeing that CapEx slowdown really manifest itself right now. The second is that the Mexican government and the citizens of that country, I think they really want to work towards a deal. So I think a lot of times everybody says tariffs and they throw up their hands. You really got to dissect it. Mexico, I think, will try to come to some agreement with the U.S. They really want to focus on the fentanyl issue as well as crime, as well as immigration. I think with China, we're moving in a very different direction where there's been more of a strategic kind of ratcheting up of tariffs, and there's more of like a competitive threat.
It feels like. You got the Taiwan announcement yesterday, Taiwan semi-announcement yesterday. The industries that they're targeting today are in the defense space and around the Taiwan issue as well. So it feels as if we're kind of strategically decoupling.
I think so. And then I would put Europe in the middle. I mean, one thing we spend a lot of time on with our companies is we're obviously judging in demand. If you go back to 2018 when President Trump first did tariffs, we built resiliency in our portfolio companies. So you had to think about supply chains. That got turbocharged during COVID when you had to force.
But also the first time around, that resiliency was often to move product to Mexico. So now when you're saying, well, it can't be China, but it can't be Mexico, but like Southeast Asia?
Well, I think what's happening is most companies have multiple outlets where they can get production. We had one company pre-COVID that had one supplier in Asia. Today, that same company has 4 to 5. So some of that's in the U.S., some of that's in Southeast Asia, some of that may be in Europe, Mexico. So I think what you've seen is supply chains have become much more diversified. That was really accelerated during COVID. So I'm not here to say it's not going to have an impact, but I do think that in terms of getting supplies to market, that will help. What's different this time is President Trump last time did really create a tiering with China, where he said he had different kind of escalations on the tariffs. There were 4 buckets. This time it's been across the board. That's a difference. Our overall view at KKR has been that tariffs would go from about 4% of imports to about 11%. That's our base case that we've had in our models as we work through our portfolio companies. So we're not waking up today saying, oh my goodness, this is a surprise. We've been forecasting that and trying to optimize that.
So do you think the market reaction makes sense here? And of course it comes kind of in conjunction and at the same time as we're talking about consumer weakening. We were talking to Dean Mackey yesterday about a slowdown coming in the back half of the year. So it's like a perfect storm.
Well, I'd make 2 points. One is the market's been up 50% the past 2 years. I think we all need to take a breath. We're down 1 or 2% year to date, and Europe's up 10, and Mexico's up. The second thing is more tactical, which we don't do at KKR, but if I put on my old lens, what I would say is bonds are actually rallying today. The dollar's weaker, and break-even expectations are actually coming down. To Steve's point, the market is discounting slower growth. It's not saying we're going to have a structural inflation problem.
Which is good if you want the Fed to do something.
Some of that gets back to what we were saying about the diversification of supply chain. So I think the near-term reaction is really around growth. My view is this isn't the end of the cycle. I think we may have spent some time on this. There's still a pretty good productivity story taking place in the U.S. This clearly is sands in the gears of globalization, but I don't think it comes as a total surprise.